All right, good morning, good afternoon, and good evening to all of you, and welcome back again in the live trading analysis series. This is again your host, Harsh Jappi, and once again a warm welcome to all of you from whichever part of the world that you are participating. Thank you for joining me. And I also believe that the screens are the screens and the audios is perfect with all of them. If it is, kindly send a message saying yes, one of them, so that I can begin the session. All right, thank you so much, Jahan Zaib. Assalamu alaikum, and everybody once again from whichever part of the world that you are joining me in. A very good morning, good afternoon, and good evening, and let us start away with the analysis of the live markets here. I also believe that since these sessions are going along since last quite a few number of weeks now, all of us, including me, are getting used to each other and also the pace of the session. So starting today, what I plan to do is increase the speed of analysis and add more instruments in the 60-minute time span that we are discussing. All right. And for those who are joining for the first time by any chance, I would like to announce that normally I do 4 webinars normally in 1 month with 2 sessions of educations and 2 sessions of live analysis. So by any chance, if you are joining for the first time, please watch out for the next Tuesday. That would be the education session on the basic wave principle theory. And you can also go through the historic recordings on the website. All right. You may feel free to put your questions at any point in time, and I will do my best to answer. Uh, Mr. Margaret, if you're not able to hear, I think there should be some problem with your personal audio, because most of the messages that I've received is they're saying that they can both hear and see the screens. All right, so kindly check your audio, please, and I think we can go ahead now. So, as a rule, if you have been in the series, I would like to post the. I'll have to read out the disclaimer first. It says that this written visual material is comprised of personal opinion and ideas. The content should not be construed as containing any type of personal investment advice and or solicitation of any transaction. Uh, it does not imply an obligation to purchase investment services, nor does it guarantee or predict future performance. FXTM, its affiliates, agents, directors, officers, or employees do not guarantee the accuracy, validity, timeliness, or completeness of any information or data that is made available, and assume no liability for any loss arising from any investment based on the same. Right, this is a normal protocol that we need to follow. So don't take it the other way around, okay? We love traders, we love trading, and we love discussing our passion with each other. So let's yes, I think yeah, Margaret, I don't know if you've solved your problem, but I've got many messages after that that it is all sound and clear. All right, thank you, brothers and sisters, once again for coming in here and tuning in. Let's get started off. So if you're able to see the screens now, it is It is a daily chart of the Euro USD, which I normally would like to begin my sessions with. And please kindly pay attention to what we are doing here. This is what exactly should be done when you're trying to work out your own charts. It may be any currency pair or maybe any instrument of your choice. All right, point number one, we would like to always go through the wave counts, potential wave counts. So I am working out on the higher degree wave count, that is the daily chart wave counts potentially. And then systematically, we will go back and work on the lower time frames wave counts and try and find out a potential trade setup by the end of the analysis session. Is that okay? So you got wave one, wave two potentially. Audio is gone. These are I think these are personal issues. Please kindly confirm if the audio is clear, uh, because I think most of them are able to hear. There should be some. Yes, Michael is saying it is very clear. It's back now, and it's all right. Hello, Marina. Welcome back. I remember you, and it is a pleasure to see you back again. Yeah. So let's continue. All right, all right, all right. It's final now. Audio and video both are clear. So let's continue. Yeah. Let's work on the higher degree wave counts quickly. If possible, I would also like to do another currency pair along with the dollar index and gold today. And we'd also like to do Dow Jones if the time permits. These sessions are very interesting to me because it's a very passionate thing that I follow. All right, if you are joining in for the first time, wave 1 and ABC, which I have not plotted ABC, wave 2 comprises of 3 waves. Wave 3 comprises of 5 waves, that is wave 1, 2, 3, 4, and 5. I'm not doing the smaller wave counts here. So a higher degree wave 3 was plotted here. And then if you can notice, wave 4 actually terminated right there around the 1.1799 mark. It actually unfolded as a triangle. Let me connect the dots for the triangle. Triangle is a form of consolidation pattern, sorry, which takes its own sweet time to produce and develop. And there you are, the triangle pattern. And ideally, the fifth wave, which also unfolded into 5 waves or 5 sub-waves, got terminated somewhere around the 1.13 mark. So the left-hand portion of the drop from 1.2550 all the way towards 1300 uh, unfolded into 5 waves, as you can see here, which is an impulse. And normally, an impulse is followed by a 3 wave corrective rally, which I'm trying to label here as a potential. It's actually trying to unfold as an expanded flat. If you have been following my sessions, we have been sticking to this potential since last 2 to 3 weeks, more than that actually. And it is slowly but steadily unfolding as we have been projecting moves. So wave C is forming right now potentially, and ideally prices should stay above the lows formed here around 1.12 in a broader sense based on the daily chart setup, right? So that should come in as a very strong support if prices are dropping lower. I don't think so. The probability of prices rallying from here looks to be more than correcting any further, and that will be very clear when when we go back on a lower daily time frame, right? So all in all, first of all, always look at the bigger picture first, all right? Get on to a higher time frame, work on your wave counts, and once you know the bigger picture, you can then start working on the smaller degree or the smaller time frame. So we should be very careful in uh, and very particular in finding out or trying to find out the recent wave which is being worked out. And the recent wave which is being worked out is from 1.12 towards potentially 1.18, looking at the structure of an expanded flat. All right, this is an expanded potential expanded flat which is being worked out right now, and we are counting on that at least for now. The alternate count, all right, please also be aware of the alternate count. The alternate counts could be that you have wave 1, 2, 3, 4, 5 completing, which comprised of wave A, a corrective drop, and then there was a three wave, which was wave B. Let me type in as an alternate here. Alternate, I'm typing in here. Alternate could be we have wave A, and then we have another alternate wave B, and the termination at 1.12 could be wave C because it has somewhat unfolded, looks like unfolding into five waves as well. So keep the alternate counts in your mind as well. That will help you to be prepared if the market is doing something else. So what are the two counts pointing towards? The count of the expanded flat is pointing on the north side. All right. I think we have got a question already. Yes, you will get the recording on the website, brother. I'm not able to see your name, but I think whoever it is, yes, the recordings should be available on the website in a few hours, maybe 24 to 48 hours. So the first count of the expanded flat is pointing on the north side, okay? And the second count, which is the alternate count, which we just predicted as an ABC over, that means if the ABC corrective drop is finished from 1.1255 levels, then the next probable move should be on the north side somewhere here, which would go all the way above 1.25, which is very early to project. All right, thank you, Findlay. Yeah. So both the counts in either ways are pointing at least a potential rally towards this zone. All right. Let me point out the zone. An expanded flat would ideally end somewhere minimum here, and it could also go all the way towards higher levels as well. Can you tell the website? Oh, it is fxtm.com. You will find the recordings on fxtm.com, the webinar section, and the historic webinars. All right. For those who are still not sure, I'm representing FXTM Forex Time Limited, and you are right now watching a live trading session in the form of a webinar, whose recordings will obviously be available on the website very soon. All right. I think there are not many questions, but the Michael. There could be some problems. I may take that, but most of them are able to hear it properly. If the audio is cracking, it could be a personal issue as well, my bro. So I'm sorry for what you're facing, but I think uh, it is not on my side because the bandwidth looks very good here. But if the problem is persisting with all of them, then there's a serious problem from my side. But at this point in time, it doesn't look like. All right, you're good now. Excellent, excellent. So let's get started. I think The questions are, yes, if it is your first webinar, please have some patience, my friend, because we have been doing educational sessions as well. So next Tuesday, the same time, you will be, please be with me and also look at the recordings. There are educational sessions. You will learn how to plot the wave counts with me, okay? But every time I do a live session, I want all of them to be together, but every time I cannot rush up the basic portion. So I'm really sorry. Please write an email to me if you have any questions on the recordings, and I'll make sure that you have the recordings. All right. Can we use this strategy for intraday equities? Vishwas, these strategies or the wave counts are good for any instrument of your choice, my bro. All right. And I'm coming to the time frame again. So please hold on. Please hold on to the structure. First, you need to understand what you need to do first, second, third, and fourth. So point number one, we have done our wave counts, and the wave counts, both of them are suggesting that the prices should be or could be moving on the north side, at least towards the zone of 1.1800, 1.1900. All right, that is a wave structure. Above that, what you should ideally be using is the Fibonacci retracement or the extension wherever it is applicable. So let's plot the Fibonacci retracement of the entire drop between 2550 and 2209. Or ideally, it should be not 2209, but it should be around 1.13 because it's an expanded flat. What do you think about using? I don't really use the Heiken Ashi on the higher time frame. I don't use indicators, my bro. Anderson. I only follow strictly wave counts, and I'm very happy with that. All right. I would like to learn Heiken Ashi, by the way, sometimes. But at this point in time, I'm really happy with these wave counts and the Fibonacci ratios and the trend lines. Spend some time on your charts with your counts, and you're going to be very happy, believe it or not. I'm doing my trend line here. You see the resistance of the trend line is also posing around the 1.18. So now the second step you do is plot your Fibonacci through the boundary. Try and find out the Fibonacci retracement levels, which are all acting as resistance. So the first one is around 1770. The second one is around 1.1927. The 61.8. So please remember the potential for this rally could be all the way towards 1.2 as well, which is around 600 points from here. All right, and the risk on the broader sense, the risk remains at 1.1215, and in the smaller time frame, maybe we can try to even reduce the risk. So at this point in time, it looks more likely, or potentially it looks more likely for a rally, at least towards that trend line resistance, which is counting at around 1.18. All right, so at least minimum level of expectation for the bulls to remain in control could be 1.18 until prices stay broadly above 1.1221, and we'll find out next support on the smaller time frame. All right, this is what you do on a larger time frame. Find out the larger wave structure, work upon the Fibonacci retracements and or extensions. And now when you're trying to find out an actual trade, which could not be found on a daily chart here, you don't have a pattern or you don't have the recent wave, or you might find difficulty in looking at that. So the next step, what we need to do is find out the recent wave which is being worked upon on a smaller time frame. It could ideally be an hourly chart, or you may also go to a 4 hourly chart if you're comfortable with that. I love watching either 4 hour or an hourly chart, so I'm trying and bringing up the hourly chart at least for now. All right, so watch out here. This looks like the recent wave building, all right, between 1.1309 towards 1.15. And as a matter of fact, if you see the fractal nature of the wave count, see, always look for the 5-3 pattern as well. If I do my wave counts or try to do here quickly, this is wave 1, an expanded flat, wave 2, a potential wave 3 up there, wave 4, it could be wave 5, right? So 5 wave up, that the impulse rally was on the north side, indicating that markets are inclined to take it further on the north side, all right? Which, if you look at it further, which is followed by a potential corrective drop ABC, an ideal zigzag maybe, and ABC. I'm putting a question mark here. It looks like a zigzag. All right, so the wave counts are looking good. You have 5 waves up and a potential 3 waves down, which could be on one higher degree. I can label this as a potential wave 1. You know the fractal nature of the market. 5 waves form wave 1 and 3 waves form wave 2. So potentially it's wave 1 and wave 2. And we have a question. Michael, yes, the general answer to your question is yes. When there is a 5 wave movement on any side, it means there is an impulse movement, and it means that market is most probably likely to take that direction in future. All right, and when there's a 3 wave movement, it shows a counter trend. A counter trend is normally 3 waves or 5 waves if it's a triangle. So that is the trend part, and this is the counter trend part. So once the trend and counter trend 5-3 move is complete, what you can normally expect is another 5 wave movement on the side of the impulse wave, which is up in this case. All right. So spread your Fibonacci again. Look to see a combination of Fibonacci support, uh, completion of waves, and also a candlestick pattern if possible. So let me zoom in a bit. If you can see here, the 50% Fibonacci support was coming in at 1.1441, and the more interesting part is wave 4 termination is where the market potentially is looking to stall. Okay, so you have normally the second wave pulls itself towards the previous wave 4. That's what the theory says, and it's amazingly true as well, because what you're seeing, uh, these prices are finding support at a convergence level of the 50% Fibonacci, pretty close to the 61.8%. If you can see it here, the price at 618 was 1.1409. It has just made a low of 1.1415, so maybe a 5-10 pips low, and that's it. It could not make a low as well. All right, so I would see this as a potential bullish reversal point, and that's what the charts are indicating. You have a Fibonacci 50%, 60% support coming in, point number one. You have a 5 waves impulse rally done, which is followed by a 3 waves corrective move, that is ABC, which is also looking to be complete. So there is no reason for us not to believe that it could be a potential trade setup for us. So, and if you look at the candlestick pattern on the hourly chart, right now it is forming a potential. I would not say that it is completed, but it is forming a potential hammer. All right, a hammer is a candlestick pattern which might be an indication of a trend change. So on lower degree, this trend was down on the lower degree, and it could change on the upside from here. All right, so this is how you find out your probabilities. Now run your risk reward ratio first. Where could be your risk? The strategy says that you should be looking to buy. We have a question here. The recording is always going to be on the website, Damilair, but unfortunately, I'm really sorry to hear that the audio is gone. But it should not be a major issue from my side because I'm not seeing any other complaints coming in. I'm getting complaints that the audio is cracking, but finally, I think since the visuals, you're able to see the visuals properly. I think you should be able to make out what I'm trying to imply here. But it's not a major issue coming in from all the participants here. So yes, the recordings are automatically uploaded on the website, and kindly look on the webinar section, the historic part of the webinar section where you can find the recordings, please. All right. So what I was saying was this. So yes, let me take this question. I do not understand five wave and three wave pattern you mentioned though. Uh, Emeka, I believe it is your first session, so don't worry. It is my responsibility to bring you up to the level, okay? Please don't worry for those who are coming in for the first time. The only thing is, as I keep on saying in my webinars, it is not you come in for once and then you go off. This is a process. You need to stay with me over and over and over again. I am delivering at least 4 webinars each month when I'm not traveling, 2 sessions education and 2 sessions live, where we discuss what we discussed in the educational session. So please do not lose your heart. Next Tuesday, that is 22nd of January, I'm going to be here again at the same time with an educational session where you can bring up to this level. And over and above, please look out for the recordings of the past educational session to get up to the pace very fast. So the next question is, after a 5 wave up followed by a 3-5 corrective one down, it's my friend, it is a 5 wave up, I agree, and it is a 3-3-5 actually. It is a 3-3-5 sorry, 5-3-5 zigzag. All right. So when you have a 5 wave up and a 3 wave down, yeah, thank you, Marina. Thank you for your kind words. Yeah, so my friend, when you have 5 wave up and 3 wave down, 5 is labeled as 1, 2, 3, 4, 5 always. All right, that's an impulse. It could be an impulse or a diagonal, but here it looks like an impulse. I will be talking in more details as what is an impulse and diagonals in the coming weeks. Please stay tuned. This is not a one-time session. You need to be with me, please, and you'll see a drastic improvement after maybe several weeks, okay? But stay tuned to the webinars, please. So 5 up and 3 down is the basic structure, which implies that the next move, the Elliott wave principle says that the next probable move could be 5 waves up from here. All right. So our duty is to find out the risk and reward ratio before we could place a trade. Always find out what is your risk and then try and find out what's your potential reward. And then ask yourself, will you be able to take that loss if it happens? and then trade. Okay. Before I take the next question, I want to complete this. Kindly excuse me. So the stop loss or the risk goes at around 1.13. Let me write down somewhere here. Okay, let me complete the reward structure as well. For the reward, I'm going to use the Fibonacci extension. So to just avoid a bit of confusion, I'm getting rid of the retracements here. And now I'm extending the Fibonacci's with the trend-based Fibonacci extensions. You need to, if you are using trading view, you need to give three inputs. That is the beginning of the swing, the upswing, the end of the upswing, and the end of the downswing as well. That's a corrective move. And what you should see on the north side is the potential extension. So let's go there. Just zoom up. Let's zoom out. Let's see if it is coming up. No, it's not coming up. So I'm going to pull the y-axis for you. Look out for 1.618 extensions. Right, look at the 1.618 extension. Are you able to see the chart here? 1.618 extension is pointing at 1.1832. All right. Now 1.1832 is converging with all the previous analysis that we did on the daily chart. If you are here with me, the trend line resistance and the Fibonacci's and all those stuff. So the potential target remains 1800 and 1830. And let me bring it back to the shape. All right, here we are. Let me take this question now. And then we decide upon the potential trade setup. I need to go. Okay, Marina, no problems. And hi, Mr. Shri Prasad, and welcome to this session. Let's continue now. Have a great week, Marina, you as well. so, so what we are able to potentially conclude here is that we have a 5-3 movement, okay, and it's good to go on the long side. What is the risk? The price is 1430 right now. Your risk is at 1300, so 130 points of risk. Mr. Rajendra, nobody knows this, but nobody knows this when. All right, it should begin any time after the 5-3 wave is completed. All right, so if you are yeah, all right, Mr. Rajendra, it should begin any time now. Our duty is to find out a potential termination of wave 2 and enter in the direction of the impulse. All right. Yes, I'm coming to the risk. Tarun, I'm coming to the risk. Let me answer this question. Chijoke, if you missed the educational session, don't worry. Every week I'm doing alternate week I'm doing one education and the other week I'm doing one live analysis. But don't miss the sessions. Please stay tuned with me every week. You can see the list of my webinars all in advance, at least 4 every month, all right, when I'm not traveling. So let us continue with the risk and reward ratio when we need to put the potential trade setup in place here. Okay, how do you find your risk? Let us understand that. It's very simple actually, but since the question has been asked, the point of entry and the point of risk is the point of stop loss is your risk. All right, so your stop loss should be around 1.13. The current price is at 1430. So 1430 less 1.13 is 130 pips. So 130 pips of risk. Let me write it down here. Risk is where your stop loss will go. All right. Or ideally that is your stop loss. Reward. Let's the reward is around 1830. So that is around 400 pips. 400 pips of potential reward. Always use the word potential. Nothing is 100%, all right? So now calculate the risk reward ratio, 130 against 400. Ask yourself, is it a good risk reward ratio for me? I think it is ideally a good risk reward, more than 1.1 is to more than 1 is to 3 actually. So technically on paper it is a good risk reward ratio. All right. For every 1 pip of risk, you are expecting 3 times that. All right. Yeah, Mr. Rajendra, it looks to be a good risk reward ratio. So 1 is to 3 is a good risk reward in this trade. And the most important question that you're now going to ask yourself is this: if the trade goes wrong, because anybody can go wrong, all right, believe it or not, analysis is all about probabilities. It's never 100%. If someone is saying 100%, then that is an incorrect thing. Nothing is 100%. You may always go wrong anytime. Well, it's always possible. So, most important question you ask yourself: if I take a trade at this price and if the trade goes wrong, can I be able to take the loss? Can I afford to lose the trade? So how do you do that? Let's go to the risk management now. Let's say you trade a mini lot. Let's say you trade one lot, 1 pip, 1 pip for $1. This is the normal conversion rate when you are trading a mini lot. Okay. So when you are trading a mini lot and if you go wrong, 1 pip for $1, what is the loss? The potential loss is minus 130 points or minus 130 US dollars. So that is your risk, all right, if you trade one mini lot. Now ask a question to yourself: will I be able to afford this 130 USD of loss if I take a mini trade? Necessary steps to mini means 0 0.1 on MT4, Rajendra. All right, what you have said is a micro lot. Yeah, Michael, I'm answering your question, my bro. I'm coming to your question, okay? Please stay tuned. I'm answering your question in a few seconds from now. So the next question you ask is 130 US dollars I'm going to lose if I go wrong. So can I afford this or not? Ideally, your loss per trade should be 1 to 3% of your deposit, not more than that. Damile, I'm really unhappy to hear this, but this is an issue which is not in general actually. Kindly change your audio device or please tune it because everybody else we are interacting with each other. All right. So, but I'm really sorry for what you're typing here. So, ideal risk should be around 1%. That means if you're, for example, let's your what account you have. Let's say you have a deposit of 1,000. For example, your deposit is 1,000 deposit. All right. So what is 1% of it? 1%. 1% is what? $10 USD 10, right? What is 2%? 2% is USD 20. All right. So make a rule what you're going to follow. Let's say you decide that I'm going to stick with a 2% rule. I'm going to put it as bold. Okay, not the entire one actually. Let me see if I can select and bold it. No. So forget it. Let's say you decide that you're going to stick to a 2% rule. Okay, 2% is your maximum loss. So what is your maximum loss, guys? Now, the maximum loss you can take is USD 20. All right, what is the loss which is being offered? What is the loss which the system is offering? What is the loss the trade is offering you right now? It is 130 US dollars risk. So straight away, your permissible loss is $20. The system or the market is offering you 120 $130 of risk. The answer to this question is you cannot trade a mini lot. You cannot trade one pip for $1. If you're going to lose, you're going to lose $130, which is going to be more than 10% of your equity or deposit that you have or the balance that you have. All right. So you cannot afford that period. You don't even think of attempting a trade here. So what is the next solution? The next solution is reduce your lot size. Do you agree with me, guys? If we reduce the lot size, instead of, let me continue here, instead of 10 pips, how about this? 10 pips for $1, which is known as a micro lot, which is 0.01 on your MT4. All right, please check it out again. So what is the potential loss now? Is minus $13. You have reduced your loss from 130 to 13 by reducing the lot size. All right, this is how you decide the lot size. The amount of trading that you're going to do is decided by the stop loss which is offered by the market, point number one. More importantly, it is decided by the percentage risk that you are allowed to lose on a single trade. So believe it or not, you do all your analysis perfectly. You're good at wave counts. You're good at impulse 1, 2, 3, 4, 5, and you do a 3 wave count and you put your Fibonacci, everything is right, and you trade a mini lot. And if you go wrong, you lost 10% of your equity. That really is a bad risk management. Just listen to this. One trade, you lose 10% of your equity. All right. 10 bad trades and your equity is wiped out. Uh, I will come up with another session for this, Mr. Gaurav, or maybe you can write an email to me at the following address. I'm typing in right now. Please write an email to me and I will explain to you via email what is the meaning of percentage and leverage and how to use it. All right. Yes, Rajendra, you are allowed to take 0.02. Uh, 0.02 goes to 26 US dollars, which is about 20. But at a personal level, if you're taking somewhere around 2 to 3% risk on your trade, please remember the single best reason for traders to not make money is not that they don't know technical analysis. I repeat myself. The single most reason across the world why traders are losing money or this, why they lose money is not the trading aspects. It is the risk management aspect. All right. You trade more than your capacity. You trade more than you can take it. Everybody is focusing on the profit, profit, profit. I say 400 pips of potential profits. All right. Okay, Chima. I think you got it. Goro, I look forward for your email and I'll explain the leverage and how to use it in a very detailed manner here. But please understand the point I'm trying to make it here. Your risk reward ratio should be first, then come down to the potential risk per lot that you trade. there that decides the lot size of your trade. Okay, you so if you have a $1,000 deposit, 2% is $20. So you cannot go above $20. That decides upon your lot size. All right. And if the risk is less, yes, you can increase the lot size. But with this risk, ideally you would go with 0.01, or as Rajendra said, our colleague said he might go with 0.02 as well. That is just about the risk which is permitted. All right. So I hope that the structure of finding out a potential risk and potential reward, and then finding out the lot size that you're going to trade is very clear now. All right, except for the leverage part, Gaurav, I'm going to write an email to you once I hear back from your side, and I will explain it to you what leverage exactly means and how you can uh, make use of that. All right, this is a very good question, though. All right, so what is the potential trade that we were supposed to decide by the end of this session? Let us write it somewhere here. So right now it is around 1.1422. So uh, please remember the word I'm using here is potential trade setup. All right, long I would say around 1.142030. Let's put it a range. Your potential risk. Uh, let's use the word potential, and your potential risk should be at 1.13, and your potential reward, as I said in the disclaimer in the beginning of the session, please do not take this as a trading advice, but this is how you analyze your chart and decide upon your potential risk, entry, and potential rewards. All right, 0030. This is what you end up with when you're analyzing your chart. It could be any instrument at any point of time. All right. So let us look at another pair. Let us. I want to do GBP USD with you guys, and there is a reason to it because I always like to be prepared before a major fundamental event is there. All right, people say most of them outside this webinar, and even myself, I used to believe that markets are moving by news. All right, news is an important factor. Like if there's a Brexit vote coming in, it's an important factor. Let's face it. But it is not the only factor that you should base your trades on. The most important factor that your trade should be based on is the wave counts or the waves. See, if you're not very comfortable with 1, 2, 3, 4, 5 or counting waves, a simple method you can use is the boundary which is being worked upon and support and resistance. I'm giving you another example of that right now. Look at this now. Look at this, okay? Let's delete this. I believe everybody can count 5 waves down here. One, I'm not writing it down, but let's do it. That was the last leg down in the pound, actually, whatever time frame or whatever day it was, the first week of January, actually, when most of the instrument dropped lower against the dollar and bounced back very sharply. No, what I'm trying to prove here to you guys and make you understand is it has got nothing to do with the news flow. Your trading, your trades has got nothing to do with the news flow. Be good at what you are doing, and that is wave counts and or other techniques, and you will be always on the safer side. And 80% of the time, I would say 90% of the time, the fundamentals will push the market on the way the technicals are showing. So five down, that completed a very big impulse wave on the downside. Let me show the daily chart quickly. But when you are trying to analyze, you always analyze like this, okay? This is, you can do your counts later on. That's the huge down boundary which is produced now. That's an impulse drop, just like the Euro USD did. All right, and now I want to focus on the smaller time frame, which I showed to you first. Okay, now this is the most interesting part. The pound has already rallied here. All right, from 1.2400 levels towards 1 point, almost 1.2950. There could be one more potential push if you count waves. Uh, let's use the arrows so that not much time is going. This could be wave one, right, followed by two, and that waves one, two, three, four, and five. The wave three could be working right now. Wave three is not yet complete. All right, or potentially what I am watching here is it has taken the first resistance out. Now, this is another technique, another way to find out what story is going on and what story could be built up. All right, this technique is also very practically handy one. So, what I normally would like to do, or what I would suggest is just work on the wave that is formed right now. Right? Don't follow the yeah, Mr. Fawab. Yes, that's what we are trying to analyze for the pound. All right. The next technical move is on the north side. Believe it or not. How do you find out? Not on the basis of the Brexit vote. All right. On the basis of the story that the chart is telling right now, it should be on the north side. But where are you supposed to enter? Let's find out. It could be on the north side, but this is not the time to enter the market because that would be an emotional trading. So let's say this is the boundary which is being worked upon right now, the arrow that I have shown. What we should normally do is spread your Fibonacci ratios across the boundary. All right. Just a minute, I'm compressing the chart because I want to draw a trend line actually. Trend lines are very powerful, very effective tools that every single trader must apply. Okay, just in case. All right, now if you realize that the resistance trend line was broken already and the market is on the buy zone or on the buy side of the trend line now. Now, a very powerful way to trade is when the markets drop and test the backside of the trend line. See, this was resistance trend line. Now prices have broken above. This same trend line is going to act as a support now, potential support. All right, so watch out for price action dropping lower, hitting backside of the trend line. This is one point. Point number two is watch out for a Fibonacci ratio coming in through. It is around 2654 and 25. So between 2580, which is 61.8% support, and 2650. So that is the buying range that I would prefer to go long because you always have to keep the risk reward ratio in mind as well. Somewhere around 25 and 26, I would be ideally buying around 25 levels, 61.8. support, because prices normally get pulled back to that level, and then exactly what happened in the euro USD right now just a while back. All right, so the buying range could be around 2500. Backside can be, prices can actually go down very fast and then pull back. That's what happens when fundamentals are coming out. But you don't have to trade, or don't have to trade during the news. You don't need to plan and execute your trade if you are having an entry before the news or after the news. Irrespective of the news, our trade plan should be clear. All right, so potential buy entry around the 2500, 2550 zone, let's say. Your risk would be around 2400, 2376. That is where your risks will go, just below the 2376 mark, okay? And then your reward, take your Fibonacci extension. But before that, let me get rid of, I think we have another question. Yes, I'm marking it, Rajendra, I'm marking it. Let's say that is your risk. Risk at 1.27, what 2370 or 75 roughly. That is the January 3rd of lows of January 3rd, okay? Potential buy range. Because why I'm doing, I normally don't follow pound actually. I trade or follow Euro USD, but I was going through some messages were coming around. Okay, beware of the Brexit. It is coming out, and so I said, why not you test your analysis skills here? 1.2550 or 2600, 2650. Sorry. Oh, I'm sorry. There's a question here. On which base made a trade which result successful trade? On Fawab is asking a question on which base made a trade. I'm not able to understand. On what basis you make your trade which makes it successful? That's what you are trying to ask. If that is the question, you need to make your yes. If that is the question, you need to base. See, this is why I'm explaining it to you. Brexit news is coming out fundamentally, but your focus should not be on what news is coming out. Your focus should be on the technical aspect, which is in your control. Find out the boundaries, find out the wave counts, find out the retracement, your risk and potential reward. All right, and that should be the basis of your trading. You may, if you, even if you're getting stopped out, it's okay, but this should be your standard method which you're going to follow every single time you trade. All right, brother. Or the next question is, although I am yet to understand this Fibonacci tool, those 2 points are buy orders, right? Yes. 50% and 60% ratio that I showed earlier, which I'm marking up with this arrow, these two are buy. Retracement levels are always buy. All right. I don't know if you don't, I think you don't understand or you don't know to apply the Fibonacci ratio. So I'll explain it to you in a while, because that is important, because you cannot trade without Fibonacci. Sorry, retracement. These are the support levels. All right. The 382 is a support, the 50% is a support, the 618 is a support, and the 786 is also a support. So you buy around the potential support. I like the 61.8%. It's not necessary that the prices will always bounce from 618, but if it does, then it's a very good place to enter. All right. So potential buy zone 2650. All right. And let's extend now. Fibonacci extension gives you the potential target. I am putting my third entry at a 618. It's not there, the prices are not there. But if you're using trading view, you need to give three inputs. So the third input is around 2600. I'm assuming that it would come there, right? And the potential target, watch out for 1.618. That is 1.3486, my brothers. All right. 1.3450, let's say, okay? So potential target 1.3450. All right. Another question. When the news has come, it's too late to trade. The correction has already been, right? Anderson, the answer to your question is this. It may have finished or it may not have finished. All right. But our focus should not be on the news coming in and we trying to trade. It's not a very good idea. Plan your trade as a routine, all right? Not focusing on the trade. Right now I'm giving it to you because I want you to get rid of this mentality of the news based trading. That's why I'm doing this right now. Otherwise I don't normally follow pound. But you have to analyze, or you should analyze the chart as a routine practice, irrespective of what is going to come out or not. All right. It is quite possible that if you are trying to trade a news, it has already done that. So you will be mostly entering at a wrong price or a wrong place, which is very dangerous. So rather than focusing on the event, focus on the chart. And most probably you will find that you're quite safe and you're trading in a very smart manner. Believe it or not, there is always a move and there's always a retracement. So we have got a move here already. That move is between 2375 and 2931. We should expect a retracement. Ideally, there should be a retracement. Not if it's not certain that it would retrace from this level. It might go and make another new high and then retrace. But our strategy should be very clear. I'm going to enter buying somewhere around the 2600 2650 range. My stop loss or potential risk would be around 24. So what is your potential risk, my brothers? Is around 200 pips. I think we got another question. Uh, Mr. Fawab, it's not a question of trend. It could be an uptrend, it could be a downtrend. Any direction can give you very good results. So don't look for an up or down. Don't be biased on that. If the trend is showing on an upside movement, go on that side. If it's showing a downside movement, go on that side. A very simple rule is to follow is count your waves 5, 3, 5, 3, 5. When you have a 5 and you have a 3, it is better to go on the next 5 direction. It could be up or down, all right? So potential risk is 200 pips, and if let's say if you get an entry here, I think there's a potential reward of 800 pips. Let's say, yeah, 26 to 34, 4 plus 4, 800 pips, yes. Now, I would request all of you who are with me right now to at least note what we have analyzed. All right. Keep a note of what we have analyzed in the euro and the pound, the two instruments that we have done today. All right. I'm not asking you to trade, but at least keep a note. Why? Because you and follow it up. All right. This is going to give you an amazing confidence as to what we are doing and how effective it is. Just make a note and follow it up. When I'm coming back next to next week, I don't know, I would not remember what we did, but please make a note and follow it up for your own benefit, that what we analyze is this, or we don't want to buy at this price, we would like to buy here somewhere, and let it go towards 34.50 with a stop loss of or risk around 23.75. So this is a way that you plan your trade irrespective of the fundamental announcement that is going to come out. All right. Yes, Michael. The question is double sworded. All right. When you see a huge trend potentially complete on a daily chart, yes, the answer is yes. It is a good idea to go on the counter trend because the retracement is huge. All right. But if it is on a smaller time frame, then it is not a very good idea. I hope I answered your question, right? Yeah, Anderson, thank you so much. Rajendra is asking a question. How many days or hours to cover high low for FIBO? Means what, Rajendra? Oh, there is no, don't go by this formula. This is dangerous. You don't take the Fibonacci based on the number of days or number of hours. Oh, it's good that you asked me right now. It is not based on the days or hours. It is based on the boundary. This is the boundary which is being worked upon right now from 2375 to 29. That's the boundary which is being formed. And how do you decide that? A very simple strategy is that bulls have taken the first major resistance at 2814. That is a potential indication that the boundary is more or less complete now, or very soon it is going to get completed. All right. No way, Rajendra, you should take. I'm going to take a 3-day Fibonacci or a 100 uh, candles Fibonacci on 1 hour. No, no, no. That's an absolute no. Work your Fibonacci on the boundary. All right. Fawab. You mean what indicator gives you the maximum accurate results? All the indicators that we have discussed right now, the most powerful indicator is the wave counts. All right. The second most powerful indicator is the Fibonacci ratios. And the third most powerful indicator is support and resistance. And the fourth indicator is the candlestick pattern. These are indicators for me. These are indicators for all of you. But what you are accustomed is to put the moving averages and the trend lines and everything. Those are good indicators, but those are ready-made indicators. If I don't like putting more indicators which are ready-made. I like to plot it on my own and find out. All right. So this is a combination of indicators for our. All right, Rajendra, I've answered your question. When Kabir is asking a question, when do we expect the? Okay, in a few hours, Kabir. At least wait for 24 to 48 hours for this video to go on the website. If you are not getting the video on the website, please write an email to me so that I can contact the management and request them to provide. Okay. How much days or months are you expecting for this trade to touch? Okay, Vishwas, I think it's a good question. Let me answer this question before I answer Fawab's question. Vishwas, there is no technique to find out what time frame it will take. But a very practical technique that I've been using is just take the time frame of the waves 1 and 2. So let's say this is the starting point of wave 1, which was on 2nd of January, and this is the terminating point of wave 2, that is around 2600 levels. Let's say it comes today or tomorrow, that is 15th of January. So it has taken about 13 days. Okay. So ideally, the next 13 days or plus minus 10% of that, it should reach the target. ideally. But this is a 40% success ratio technique. It's not a 100% technique. All right, which was, but yes, I like doing this. I do this way. Indicators again, all four of them. Yeah, the best indicators that you can use. Number one is the wave theory. If you know the waves, you are the king. All right, you need to learn how to do the waves. So first is wave counts properly. Point number two is trend lines. Trend lines. Point number three is Fibonacci ratios, and point number four is your candlesticks. Yes, thank you very much. I don't know the name, but waiting for name 20,000 something. Thank you very much. All right, Fawab, I think I've answered your question, and Findale as well. Yeah, so most powerful, be good at your wave counts. That is the first step. You cannot avoid this. Then apply your trend lines, Fibonacci ratios, and watch out for candlesticks. Combined together, it's a very powerful system to place your trades on. All right, so if you have any other questions, I may want to take it. Which indicators are good lagging or non-lagging? Rajendra, I really don't believe in indicators and I don't use indicators for my trades. But the sake of the question that you asked, you may want to use an RSI or an MACD. That's it. I am not. You saw my chart analysis. I think you have been following. I've seen you coming back again and again. You must have seen we don't put indicators at all, and never base your trades on indicators. Indicators are not to be seen for planning your trades. Believe it or not, indicators have to be seen to only get confidence to your trade setups. That's all. So you can take it an RSI or an MACD divergence scenarios that are good place to enter. All right. Uh, yeah, thank you, Finlay and Vishwas. Your question is, thank you for your earlier answer. Can I use? Yes, you can use it in intradays everywhere. All right. You can use it intraday everywhere, Vishwas. Rajendra, I think more base, don't base your trades only on indicators. Take your guidance from the indicators only to get more confidence. Damiller, I'm so happy, my bro, you got your audio back. But then it's unfortunate we are very close to closing the session here. Uh, harsh.narendrajapi at fxtm.com. Yes, this is my email, harsh dot NARENDRAJAPEE at fxtm.com. Please write an email to me and I'll be more than happy to get back to you. But I'm very glad that you got your video or audio back, bro. It's a bit late, but better luck next time. And I'm going to see you all guys back again next Tuesday, same time, with an educational session. All right. Yeah, yeah, I will get back to the email as well. Thank you so much for joining again, and I see you guys next Tuesday around 6 p.m. India time. Thank you, Kabir, and goodbye. I am signing off the session now, and may God bless you all, and you guys have a wonderful week ahead. And even if you're not trading, please keep a note of what we analyzed here. Goodbye, Fawab, and goodbye, all of you. Take care and God bless. See you soon. Bye bye. Thank you, Anderson. Bye bye.